Talks, sponsored by Lexus of Las Vegas and Lexus of Henderson.
Your paycheck may look a little bigger this month. President Trump's executive order temporarily deferring payroll taxes is in effect. Local financial professional Brad Zucker from Safe Money Advisors breaks down who qualifies and what workers should know about it. Brad, give us an explanation. What exactly does this executive order entail?
Well, it's effective September the 1st, and it gives businesses the opportunity to defer the Social Security payroll tax paid by the employees, and that's about 6% of our wages. And this is all part of the COVID-19 relief package that is designed to boost the economy and put more money into the pockets of American workers immediately.
So who qualifies for this program? Is it everybody or just a select number of people?
Yeah, that's a great question. Employers can choose to either opt in or opt out of the program. If an employer chooses to opt out, you can't do it on your own as an employee. So employees who qualify have to earn less than $104,000 annually. And workers participating in the program are going to see an increase in their wages immediately. But it's important to remember, this is a deferral, not a forgiveness. In other words, employers have to pay this money back to the IRS in 2021, meaning your paychecks will be less than next year, and employers are responsible whether they have someone quit or retire. Large companies like CVS, Wells Fargo, and Home Depot have announced they're not participating in the program.
Now, given those conditions, does that mean it will also affect Social Security?
Well, that's a concern to a lot of the experts because 90% of Social Security is funded through the payroll tax. And the future of Social Security weighs on presidential elections. President Trump wants to eliminate the payroll tax if he wins a second term. Democratic nominee Joe Biden wants to increase Social Security benefits for Americans by funding it through higher payroll taxes for the wealthy.
Now, given these conditions, so what should workers know and how can they prepare for the future?
Well, the first thing you want to do is speak with human resources to see how your employer is handling the program and if they offer the payroll tax deferral to the employees. You also want to take a look at how your particular paycheck will be affected by this. It's going to increase with only a few months left to go. So you need to plan ahead and make sure that money is set aside and preparing for a decrease in your wages. Finally, start saving money, because this program expires by 2020, and you have to have the employers pay this money back to the IRS by April 30th. So having some money set aside will prevent draining your investments or taking on debt just to make ends meet, and having a separate savings account will also help you focus on long-term planning like retirement issues.
All right, some good information there, Brad. Thank you again for your time. We'll have all of this too at ktnv.com/money. We'll be right back.